All right, folks, happy Sunday. Coming at you with a analysis of the S&P 500. We're using ES for this, so I guess the futures, but the same analysis applies obviously to SPY or SPX, whatever. And we're going to do an analysis of ES and the VIX for 2022, where we're at right now, and 2018, 2008, and 2001. So comparing the most recent bear markets to today and where we are. I'm not going to spend too much time on 2018 just because I don't think it's a very good comparison for this bear market. I think the pullback is characteristically different, and we'll get into that when we get to 2018. But anyway, just for your reference, the red line is the 200-day moving average, and the blue line is the 50-day moving average, both simple moving averages. And here I've got some levels that we'll discuss. So currently, the all-time high was January 4th, 2022, and the low from this was June 21st, June 17, 2022. So that's been a 25% pullback so far, and we did that in, let's see, about 164 days. So we'll use that as kind of a template for how we compare to 2018, 2008, and 2001. So just going based off of that, and most importantly, we're going to be doing some fib retracement analysis on this. So if we do the fib retracement, the two key levels that I actually look for are the 50% and 618 retracements. So if you look at where we are now, you can see that we're consolidating in this range here. This line here is actually the anchored VWAP from the swing high from March 29th. I found that to be, I mean, if you look at it here, it was a pretty good period of resistance, pretty much in this downtrend. And then we broke it, and then we've been consolidating above this. And then this is the anchored VWAP from the all-time high. So we have yet to break that. Pretty much lines up with this 50% retracement from all-time highs. And then here's the 200-day moving average right here at 4,330. So basically what I'm trying to get at is above this anchored VWAP from the all-time highs up to this 0.618 level, I'm expecting some strong resistance, obviously horizontal resistance as well in this area. So basically what I'm getting at here is that I'm eyeing a swing trade for probably 6 to 8 months out, and we'll talk about contract selection and all that at the end of the video. But looking at new lows on the year and for probably Q1 2023, and I think this is a fantastic area to start thinking about what you're going to do in terms of scaling short. So obviously you want to keep in mind this range here that we've been in the last week and a half or so. I do think we have room more to the upside. I do think we should probably test the 200-day at least once in this bear market. You know, we haven't tested it since we really definitively lost it here in April. I mean, you can consider this testing. This is all really chopped to me. But the real downtrend started down here. Obviously, you had a downtrend here, little fake out reclaim. But anyway, what I'm trying to get at is you have multiple 200-day moving average back tests, and this seems like a great area to think about how you're going to scale short. But we'll get to the contract selection and all that. Let's take a look at the VIX now. So far, the high on the VIX was back in January. So if you look at the crosshairs that I have here, the crosshairs here at the bottom, they line up on my ES chart and my VIX chart. So here you see that this was the VIX top on January 24th, 2022. So worth noting that the VIX hasn't gone over 39 since January. So it made new lows, what was it, June 17th, and we didn't get an elevated VIX. So the VIX only got up to, the high was 33 there. So we haven't made new highs on the VIX. I think this was, if I'm not mistaken, the Ukraine invasion day. So basically what I'm trying to say is there hasn't been a huge panic candle yet to get us over this 39 level as we're making new lows. So that's worth noting. Let's go ahead and go to 2018. As I said, I'm not going to spend too much time on this 2018 analysis, but let's do it just for completeness sake. So if we do the fib retracement, this actually happened to be the bottom in 2018. If we look at the 50% and 0.618 retracements, after we cleared 618, we cleared the 200-day, and we went on to make new all-time highs. So I don't think it's a great comparison because we did this in 96 days and we're already past that. The low was 22%, fundamentally different pullback. I don't think this is a great template to use, but just since we're doing the technical analysis here, and I would want to just use this low as an example. So if we use this low here, the 2604 low in 2018 from October 29th, you can see that the 0.5 and 0.618 retracement levels provided a great spot to go short here. So just using that as a reference, this level works wonders. Oh, that's live ES alert there. It's a great spot to use in your analysis is what I'm trying to say. So anyway, as I said, not going to spend too much time on 2018, but let's look at the VIX before we move on. So the VIX bottom was at 36 again. I don't think that's a great measure. This pullback was fundamentally different, but anyway. Let's move on to 2008. So this is where it gets a little more interesting. The high was October 11, 2007. And then that took 160 days approximately to get to this minus 21% level, which is analogous to where we are today, I would say. So if we use this as an example for where we are today and then move forward, we made lows 354 days afterwards. So pretty much a whole year. This was March to March. 2009 was the low. So I'm not saying that it's going to be the same exact scenario here, but history is not going to be the same, but it does rhyme. So with technical analysis, that's the patterns that we're looking for. So let's take a look at the fib retracement here. So you saw that this 0.5618 range here with the 200-day confluence was a great spot to go short. And then if you went short here, that's a 53% move down in 290 days. So let's just call it 3/4 of a year. So that's kind of where I'm using this kind of pullback. I'm not saying we're going to decline 50%, but if we look at ES, this yellow box is what I outline as kind of my general rough guideline for if we were to make new lows on the year. If we were to break 364, then I think that, well, one spot of interest at least is this area, this consolidation box that was pretty much like what I consider the pre-election chop that started in September and then ended election day, and then this was after the election, this big bull run. So this is a huge level that I'm eyeing. So the first level would be 358, 3587, whatever. And then this level is the pre-COVID highs. So that's 3391. And then the low for this consolidation area is what is it? Let's just call it 3235. So somewhere in this range, I mean, I'm just going to use the middle, which is the pre-COVID high, as my target, which is 340. I think that's a conservative yet also aggressive So pretty much a reasonable target here. If you want to go conservative, this would be a more conservative estimate. But you know, I do think that we're going to make new lows based off of the VIX and what I see in ES, but obviously every trade is going to have a stop loss, so we'll get to that later on. But basically, if we breach these levels here to the upside, then I'm not going to stay short into that move. But anyway, looking back at 2008, if we look at the VIX, so here if we look at the VIX, let's actually go back to October. So this is where we had all-time highs, and then you saw that the VIX was pretty much, you know, in a reasonable range under 36. So like I say 36 is a reasonable range because, like, I mean, obviously this is down, but we haven't seen any sort of like cataclysmic moves yet, right? We saw like this one here was a big VIX day, but it's still just like 20% off highs. You know, it's not like a crazy bear market. I guess the assumption here is that the stock market obviously keeps going down and that this isn't any different than any other cataclysmic bear market pullback. But I mean, everyone has their opinions on it, but using some technical analysis here to provide some context and clues. So anyway, so basically what I'm saying is above 36, 35 is where you get that kind of pullback that's probably going to take like a minus 30, 40, 50% to digest and will last probably, you know, a year or two to really come back and digest. Anyway, so let's take a look. So basically we were in range on the VIX to 36 here, which is very similar to how we are today in 2022. As we said, the VIX high so far at the January high was 39. So pretty much in line with this here, 35, 37, pretty much in line with 2008 so far. And the high on the VIX actually, if we look at the crosshairs on the left side on ES, was on October 23rd, 2008, which was at 96.4. So pretty nuts. But I will like to note that the high on the VIX wasn't the low on ES. So the 2008 bottom, which I've made a note of here, was at 52. 52 on the VIX is still pretty damn high. As I said, the VIX so far only has a high of 39. So, I mean, this is even higher than 39, and this was right here, March 6, 2009. So it took, what was this, a year? Yeah. It took a whole year to make a bottom from this 20% pullback. So I'm not saying it's going to take a year for ES to find a bottom in 2023, but you know, just keeping the mind open to the possibilities and what can play out here. Let's jump into 2001. So 2001 was another brutal pullback. So this was 31%, 364 days. So it's a bit longer to get down to this 25-30% range. But if we look at the fib retracement here again, served as a great spot to go short here in 2001. You know, you have the 200-day moving average in confluence with this 50% and 0.618 retracement. And then what happened after that? It took, is this the bottom? Yeah, this one. 566 days to make a bottom, and another 30%. So pretty long and brutal pullback there. And that's the big picture on 2001. So let's take a look at the VIX. Yeah, unfortunately, the VIX chart for 2001 looks like rat droppings. So we'll have to take a look at the weekly here. Let's go to 2001. So yeah, here we go. So the 2001 bottom was at 48.5, which is right here. And interestingly enough, we actually did see a high on the VIX. Let's just make a note of this level. I didn't have the note here. 43. I mean, I bet you a lot of people thought this was capitulation. 2001. But I mean, this is after 9/11, so a lot was going on here. I would say fundamentally different, but black swan event, so a lot of things at play here, but that's why it took 566 days to find a bottom here. Bear market, black swan event, and then new lows. So just going back to today, basically, if we're to, I guess, use a time frame and look at some targets below, like if we just go from here, if this wants to work, there we go. If we're gonna eye like the middle of this spot, let's call it 340. And then say it's going to take 200 days to get there. I'm probably going to spend some more time looking at contract selection and so on and so forth. But if we just say, let's just say 335, 3350, and 200 days. So that's about 18% from where we are now. So what I've done is I've actually put into the options profit calculator for some inspiration. Say we're at 330 on February, end of February, and I just put in a number, $15,000 is my maximum risk. Obviously you can play around with this. This is a great tool for figuring out, some kind of swing trade, longer type of strategies. I just did long put here. So it suggests you different possibilities of contracts that you can select. So if we just look at, let's see, I can't get rid of that ad. Okay. All right, this is nice. So if we look at here, if our stop loss is, and by the way, this was 7 contracts, if we're just using this as an example. Buy 7 of the March 2023 395 puts at $20 each. The entry cost would be this. So it's $2,000 or $2,100 per contract, and you're risking this much. And so let's take a look. So it says your break even at expiry is 374.3. So you would lose nothing, less your commissions on the trade. With this contract, the 395 put, on March 17th, 2023. So that's over here, March 17th, 2023. If it's at 373, what was it? 373.3. So 373, I'm using SPY. So if we don't even crack new lows, you would break even on this trade. So I think that's a really good probability, if you ask me, based off of all the technical analysis we've done. So I like the odds there. Obviously, on the other side of things, if we do keep ripping through the 200-day and through this 61.8% retracement level, then we can also look at what our stop loss is going to look like on the negative side. So also keep in mind that I'm going to be scaling in to this contract near this VWAP level that I talked about from all-time highs, and near this 0.5 retracement, 50% retracement from highs. So it won't be in this consolidation. Like I said, I do think that SPY, ES, SPX has some room up more. But on the other hand, if we do break this 40-80 level, I do think that it'll be hard for us to come back above this high, but obviously technical analysis, you have to take things with a grain of salt, and you get new data every day. So this is my thesis right now in this present moment in time. But my thesis in the short term is up into this range, but this is what I'm saying. I'm scaling into these, we'll call it 7 contracts if I'm gonna, if that's my entry cost, right? Just using an example. So obviously if the price moves up and I'm scaling up, this isn't gonna be, my actual loss, because I'll be closer to my cost basis. But if I hypothetically was to scale in everything here, and August 22, I would be looking at this is 435, 432, whatever. We're looking at a $5,000 loss. Okay, so let's call our risk $5,000 if we were to scale everything in here at once. But say come in January, which I think is a reasonable time, we get down to, let's say, the top of this level, 358. So 358 in January. Where is 358? I can't read. Okay, you're looking at a $17,000 return, about $15,000 to $17,000 return. So 100% gain on that contract. So the risk reward here, in my opinion, is in your favor in the immediate term, and also based off of the technical analysis that we've done. Obviously, this is a long-term swing trade, so you're going to have to keep up with doing the analysis as it comes. But this is kind of where my mind is at, and what I'd be looking to open up in the next week or two, depending on what happens here in this area above 40.80 and below 436. Yeah, all the levels are here. Feel free to reference them, and let me know if you have any questions. But hope you found this video useful. If you have any tips for any future videos or any questions, let me know. But I hope this was useful, and have a great rest of your weekend, and good luck trading this week.